Understanding the difference between tax credits and tax deductions is crucial for individuals and businesses to minimize their tax liability. In this guide, we will explore the key concepts, practical examples, and best practices to help you navigate the world of tax credits and deductions. First, let's define what tax credits and deductions are. A tax deduction is an expense that can be subtracted from your taxable income, reducing the amount of income that is subject to tax. On the other hand, a tax credit is a direct reduction of the amount of tax you owe. For example, if you have a taxable income of $50,000 and a tax deduction of $10,000, your taxable income would be reduced to $40,000. However, if you have a tax credit of $1,000, your tax liability would be reduced by $1,000 directly. The key difference between tax credits and deductions is the impact they have on your tax liability. Tax deductions reduce your taxable income, while tax credits reduce the amount of tax you owe directly. Another important concept to understand is the difference between refundable and non-refundable tax credits. A refundable tax credit can result in a refund if the credit exceeds the amount of tax you owe. For example, if you have a tax credit of $1,000 and your tax liability is only $500, you would receive a refund of $500. On the other hand, a non-refundable tax credit can only reduce your tax liability to zero, but not result in a refund. To illustrate the difference, let's consider a practical example. Suppose you have a taxable income of $60,000 and a tax deduction of $12,000. Your taxable income would be reduced to $48,000, and your tax liability would be calculated based on this reduced income. Now, suppose you also have a tax credit of $2,000. Your tax liability would be reduced by $2,000 directly. Best practices for maximizing tax credits and deductions include keeping accurate records of your expenses, consulting with a tax professional, and staying up to date with changes in tax laws and regulations. It's also important to understand the specific tax credits and deductions available to you, such as the Earned Income Tax Credit, Child Tax Credit, and Mortgage Interest Deduction. In conclusion, understanding the difference between tax credits and deductions is essential for minimizing your tax liability. By knowing how to claim tax deductions and credits, you can reduce your taxable income and directly reduce the amount of tax you owe. Remember to keep accurate records, consult with a tax professional, and stay informed about changes in tax laws and regulations to maximize your tax savings.